The US economy has just outpaced China's for the first time in over 30 years. Even more surprising, one state is pulling more weight than any other in driving this economic surge. Believe it or not, the world's biggest economic shift is happening right now, and it's all thanks to a state that most people don't even think about when they talk about global powerhouses. Today, we'll talk about how the US is surpassing China's growth and how one state, yes, just one, is leading the charge. This story isn't just about national numbers, it's about something else entirely. We're diving into the forces at work, exploring why this one state is growing much faster than others and what it means for the future of not just America, but the world. Stick around, let's find out what's really driving this change and whether this growth is sustainable or if it might create bigger problems down the line. So, for decades, it's been a widely accepted belief that China would inevitably overtake all countries' economies, including the US. With China's rapid industrialization and population size, many analysts and economists confidently projected that the balance of global power would shift eastward. But something unexpected is happening. The United States, despite being an established economic giant, is now growing faster than China for the first time in over 30 years. This isn't just a small uptick. The US has long held the position as the largest and most diverse economy, but China has been steadily closing the gap. Until recently, everyone was expecting that China's economic growth trajectory would eventually push it past the US. After all, China's population of over 1 billion people, massive infrastructure projects, and booming manufacturing sector made it seem like only a matter of time. However, the landscape has changed all of a sudden. China's GDP has failed to overtake the US. Experts are wondering what's really going on beneath the surface. This reversal of fortunes has significant global implications. If China was once seen as an unstoppable force poised to dominate the 21st century, now, with the US pulling ahead, that narrative is being challenged. Countries around the world have built strategies based on China's supposedly inevitable rise. Now they are all reconsidering those plans. Part of the reason for the US's unexpected growth spurt lies in the economic performance of individual states, and believe it or not, it's Florida that has emerged as a major player in this turnaround. Yes, you heard it right, Florida. While many other more advanced economies have stagnated, Florida has been growing at an impressive rate, helping to buoy the national economy. This growth isn't just limited to traditional industries either. Florida has seen job growth in tech and finance sectors, attracting skilled workers and major companies from other states, further propelling the US forward. The global perception of China as the rising economic superpower is just that, a perception. Slowing growth in key sectors, demographic shifts, and increased regulatory pressures have long been causing its economic slowdown, while the US has been benefiting from a stronger-than-expected post-pandemic recovery. As a result, analysts are now revising their long-term forecasts for both economies, with some even questioning whether China will ever surpass the US at all. Granted, there's more to this story than just US versus China. Within the United States itself, the picture isn't exactly uniform. While the national economy is growing, nearly 2/3 of US states aren't keeping up with that pace. Growth in these states has been sluggish or stagnant, leaving just a handful of regions to do the heavy lifting for the entire country. And Florida stands out as a key driver of the nation's economic success. The Sunshine State's economy has been booming in ways that outshine even traditional economic powerhouses like California, New York, and even Texas. Despite its smaller size compared to these states, Florida has been growing faster and attracting attention from economists across the country. While California has seen population declines and New York has struggled with stagnation for over a decade, Florida's economy has surged ahead, with its GDP now rivaling that of entire countries like Mexico and Spain. So why is Florida experiencing such rapid growth while other states are lagging behind? One of the biggest factors is taxes, or the lack thereof. Florida's absence of a state income tax has been a huge draw, not just for retirees looking to stretch their savings, but also for highly skilled workers and major companies looking to save money. This low-tax environment has made Florida an attractive destination for both individuals and businesses, driving a migration of talent and investment from other high-tax states like California and New York. But it's not just those low taxes. It's also Florida's economy that has diversified in unexpected ways. Traditionally known for tourism, agriculture, and mining, the state has expanded its footprint in finance and technology. Miami, for instance, now boasts the highest concentration of international banks in the US, making it a growing hub for financial services. Meanwhile, tech companies have been setting up shop in the state's largest cities, taking advantage of its favorable business climate and relatively lower cost of living. Florida's economy wasn't always the dynamic force it is today. For much of its history, the state was synonymous with tourism, agriculture, and mining. The sunny beaches, Disney World, and other attractions drew millions of visitors each year, turning tourism into a billion-dollar industry. Agriculture also played a significant role, with citrus fruits, sugarcane, and cattle farming contributing heavily to the state's GDP. Florida's warm climate and fertile soil made it one of the largest agricultural producers in the U.S. Mining, although less glamorous, was another key sector. Florida is one of the world's largest suppliers of phosphate, a mineral essential for fertilizer production. Phosphate mining is so important that Florida provides roughly 75% of the phosphate used in the U.S., contributing significantly to national food security. But despite these strong foundations, Florida's economy had its limits. Tourism, agriculture, and mining alone weren't enough to turn Florida into the economic powerhouse it has become today. Something had to change, and it did, fast. In the last few decades, Florida has undergone a remarkable transformation. Two key industries, finance and technology, have emerged as driving forces, attracting investment, skilled workers, and corporate headquarters to the state. Let's talk about the finance side real quick. Miami has become a financial giant almost overnight, which, if you think about it, is kind of odd. Once upon a time, it was only a vacation destination, nothing more. But now, Miami boasts the highest concentration of international banks in the US, surpassing even New York. Florida's business-friendly environment, strategic location between North and South America, and again, low taxes, have made it an ideal spot for multinational financial institutions. Banks and financial services firms are flocking to Miami to take advantage of its proximity to Latin American markets and its ease of doing business in a low-regulation environment. This shift has transformed Miami into what some are calling the Wall Street of the South. The city now hosts a wide range of financial services, from investment banking to asset management, drawing in both capital and talent. Finance has become not just a powerful new industry for Florida, but a cornerstone of its continued economic expansion. Next up is Florida's technology industry, which is seeing rapid growth. While the state isn't typically associated with tech innovation, that's quickly changing. In recent years, tech companies have begun setting up operations in cities like Miami, Orlando, and Tampa. Drawn by the state's favorable business climate, lower operating costs, and growing tech ecosystem, these companies see Florida as the next big thing. The rise of remote work has only accelerated this trend, with tech workers and companies leaving high-cost areas like San Francisco and New York for the Sunshine State, where they can enjoy lower taxes and a much more affordable lifestyle. Miami in particular has benefited from this influx, with startups and venture capital pouring into the city, further cementing its status as an emerging tech hub. This transformation isn't just about industries, it's about people. Florida's relatively low cost of living, lack of state income tax, and warm weather have made it a magnet for highly skilled workers from other states. This influx of talent has brought in not only tech workers, but also finance professionals, engineers, and entrepreneurs. They're moving to Florida in search of better opportunities, and the state offers them a thriving job market without the high costs associated with places like California or New York. As a result, Florida now has a growing pool of highly skilled workers driving innovation and economic growth across the state. This talent migration has been crucial in helping Florida evolve from a vacation destination into one of the most dynamic economies in the U.S. today. Florida is no longer just a place for beaches and theme parks, it's where people go to work, innovate, and build their careers. Florida's evolution from a tourism and agriculture-based economy into a modern financial and tech hub is reshaping not just the state, but the entire U.S. economy. As companies and talent continue to flood into Florida, the state's influence on the broader U.S. economic landscape will only keep growing. Of course, this success comes with consequences. For one, Florida's rapid growth may be coming at the expense of other major U.S. states, particularly economic heavyweights like, again, California and New York. For years, these states were seen as the prime destinations for tech professionals, entrepreneurs, and investors. But recently, many are packing up and heading south. As these skilled workers and businesses leave behind high-cost states, it's creating significant economic consequences for the places they're leaving. One of the biggest challenges for states like California and New York is brain drain. Talented professionals who were once the backbone of their economies are now leaving in droves. Silicon Valley, once the global hub of technology innovation, is seeing some of its best minds relocate to Florida. The financial sector, long dominated by New York, is also losing top talent as major firms open offices in cities like Miami. The result is a shrinking talent pool in these states, which could slow down innovation and economic growth over time. But going back to Florida's rise on the national stage, it has been nothing short of remarkable. Today, the Sunshine State holds the title of the fourth largest economy in the United States. This isn't just a local success story, it's a development with national and global implications. Florida's economy now rivals entire countries in terms of GDP. For perspective, its economic output is comparable to that of Mexico and Spain, nations with far larger populations and established industries. Florida, on the other hand, has a population of just over 21 million, yet its influence is growing rapidly. The state's GDP, which now hovers around $1.4 trillion, cements its role as a key player in the U.S. economy. Can you imagine Florida as an independent country? If it were, it would rank as the 14th largest economy in the world. That's a staggering figure when you think about it. The idea that one state could outperform entire nations shows just how significant Florida's economic contributions have become. This position gives the state outsized influence not only within the US, but also on a global scale. As more businesses, investors, and workers flock to Florida, it continues to solidify its place as a critical hub for finance, tech, and innovation. However, with this rapid expansion comes some important questions. One of the biggest concerns is whether Florida's growth is truly sustainable. As mentioned earlier, much of the state's success has been driven by its ability to attract skilled workers and businesses from other high-cost states like California, New York, and Illinois. Florida's low taxes, warm climate, and relatively lower cost of living have been huge draws, but there are challenges on the horizon. For one, the continued influx of people and businesses is driving up costs, particularly in housing. As demand for homes and commercial spaces skyrockets, prices are following suit, leading to concerns about affordability. Longtime residents are already feeling the pinch, with inflation and home prices climbing higher than many can manage. This raises the question, can Florida continue to be a magnet for talent if the very cost advantages that made it attractive begin to erode? Moreover, Florida's economy is still highly reliant on industries like tourism and agriculture, sectors that are vulnerable to fluctuations. The state's tourism industry, in particular, can be impacted by factors outside its control: natural disasters, pandemics, and even shifts in consumer preferences. While finance and tech are growing industries, they may not be enough to cushion the state from the effects of economic downturns or other challenges. There's also the question of infrastructure. Florida's population has been growing at an incredible rate, but the state's infrastructure, roads, public services, and utilities, may struggle to keep up. As more people move in, the pressure on these systems will only increase, and failing to invest in the necessary improvements could hinder further growth. Regardless, Florida's remarkable growth is playing a huge role in the broader US-China economic rivalry. As the US economy continues to expand at a faster rate than China's for the first time in over 30 years, states like Florida are helping to tip the balance. The influx of tech companies, financial services, and high-skilled workers into the state is boosting US economic performance at a time when China's growth is slowing. This shift isn't just about numbers. More importantly, it's about how the rest of the world perceives economic leadership. On a global scale, Florida's rise is helping shift perceptions about the U.S. economy's resilience and innovation, reinforcing the idea that the U.S. is not only maintaining its position, but is also reinventing itself in new industries, such as tech and finance, where future economic leadership will be critical. This shift is having ripple effects globally because, again, countries now reconsider their strategic alliances and economic partnerships in light of the U.S.'s ongoing dominance. And that's it for this video. Florida's rapid growth is more than just a local success. It's playing a crucial role in the U.S. overtaking China in economic growth. As we've seen, Florida's booming finance and tech sectors are drawing talent and capital from other states, helping to drive national economic performance. This shift isn't just about boosting the US domestically, it's reshaping global perceptions of economic leadership, challenging the long-held belief that China's rise was inevitable. But what's your take on Florida's role in the US-China rivalry? If you've been living in Florida for a while, did you see this growth coming? Drop your thoughts in the comments, and please like this video if you found it insightful. Don't forget to subscribe if you haven't already, and hit the bell icon so you won't miss our next deep dive. Thanks for watching and for your support.